The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. And we're going to take a look immediately at crude oil here, and that's been something on our plate for a while. Here's the weekly situation. 53.67, those weekly and for highs that we had to breach. We talked about a retest of that will be really, really cool. But we're going to kind of look and see how we've been acting on the dailies. No new profiles appearing. And the interesting thing I wanted to bring up immediately was the 240s on crude oil. And this is, we talked about this move might not be over the other day when we had this yellow bar appearing on the 240s, then we had the new box. So we looked at this area of 5504 as support, and we caught a good move off of that. And as we look at this now, this is kind of the way I'm looking at crude oil. I'm looking at 5504 again. Excuse me, this is the May contract as support on the short term, right? So I'm still looking at this as a buy, right? And I'm also looking at the dailies, kind of trying to block that out for just a little bit because I don't have any new boxes attempting to appear, no new profiles attempting to appear, no new supply up there. But the key thing is these 240s kind of regulate the trade up. If you'll notice, we kind of use the profiles to kind of okay to be long, not okay to be short, or vice versa. Now, if we break the 5504 area, the next stop down, in my opinion, could be that retest of the weekly. So you got to kind of put your stops in place, take the medicine if you're still playing the buy the dip game on oil. And again, there's a lot of bearish news out there for oil, and it's still literally sitting in the balanced area on the short term and not showing any long-term breakdowns. Now, anything can happen. 53.67, we always talk about the close above profiles and the retest are always the very, very powerful high probability areas to try to pick battles. And this is par for the course. It's nothing new. This is just going to be something we have to pay attention to. Remember, oil hasn't really broken stride like this in a long time. We've been talking about blocking out the short side of the market. As we had kind of gotten into this profile, the news was out, the dollar situation, dollar getting a little creepy on the downside here, should be a little supportive of oil. But remember, this is the big number, 53.67, and you've got this 5504 just to sum it up on the short side. I'm still a buyer of the short-term support areas on oil. I don't care what the news is saying, and let it come out. But I'm going to put my stops down below there and then try it again at 53.67. Okay. That same premise and concept, I want to kind of go into the Canadian dollar just to kind of give you somewhat of an analogy here. Let's take a look at the Canadian dollar. All right, so we talked about this thing, strong profile. This is long-term profile appearing below. This is our weekly. And we talked about the maximum support area for this 120.58.59. I think we hit a low last week of 120.88. So again, this is another just piece of the puzzle. On the longer-term moves and inflection points, you've got to give yourself a little bit of a noise factor. It's not going to just be some Betty Crocker recipe that, it always hits the inflection point and everybody is happy at this is trading, and you got to give yourself a little bit of leeway in these longer term situations. Now, the reason that happened, we talked about the Canadian support, initial support around 124.27, 28. Now that daily, this is our daily. The daily support was breached. That's what stops are for. This is very, very analogous to oil right now. Remember, first cracks, 240 on oil, then we're going to take a look at the weekly. It's a very similar situation on the Canadian dollar that has happened here. And this is our daily again. We've got a good little bounce here. I mean, these are nothing to sneeze at. These are 200 pip moves in the Canadian dollar. Wow. So what do you do with it now? So as this 124.27 was breached, then our next kind of pick the battle area was that 120.58, and we hit 120.88. So now what do you do? We are now, excuse me, folks, we are now sitting like this on the 240s. So am I a fan of buying this? I think we could actually retrace back up into that 124 area. But on the short term, we kind of made the bounce. We're probably going to rattle around here for a little bit. The U.S. dollar is, to some degree, kind of churning around here. I don't have to tell you that. I know you've been watching this. We're in the balanced area on the U.S. dollar. Nothing new here. We broke back down into that balance area a few days ago, and not a lot of direction here. So the Canadian dollar, I think, the maximum little power move has happened. I think we're going to churn around, and I don't know if you have any huge leverage here. There's not a lot of major inflection points on the Canadian dollar, but the scanner picks these things out. So as I go into the scanner, this is our desktop version, which please, Tommy and Michael, talk today about getting that situated for TFNN users. I'm going to go in here. I'm going to kind of block out what I was looking at, the S&P 100. I'm going to come in here and look at the currencies. And, these are some of the generic currencies. And, Mike, we've had some requests for some more currencies, so I'm going to send you those. As we look at the Canadian dollar, what happened here is we were able to find that bottom as it was happening real time, just alerting us, or excuse me, top. As I mouse over, you'll see that 120.58 area there. And this was kind of the, come into that area as I just spoke of. So now, again, you got the different little situation across here. And you see we were looking at the 240s, and you'll see now that that's at the bottom of that profile, and it gives you those profile numbers very clearly, 122.33 sitting there. So, use this to your advantage. It does kind of give you some, gives you some really good heads up opportunities as they're happening live. Okay. So, and I use it to lean on constantly. I don't like to trade without it. And I'm not just saying that. All right. So, and I looked at Jay. He says he spent most of his weekend detailing my friend's minivan, Scooby-Doo. That's not a van down by the river, is it? If you ever saw the Saturday Night Live sketch, Chris Farley. It was a good sketch. Smoking doobies down by the... Okay. Anyway, here we go. So let's take a look at the S&Ps next. Here we go. And Al constantly reminds me that I'm not a comedian, so I just try to keep that in perspective. Al at TFNN. So here we go. Here's the situation on the S&Ps. I don't have to tell you what's going on here. We've come down, and we talked about not being extremely gung-ho about longs, and I'm going to show you why. As we looked at, let me just clear this out. Let's just focus on this stuff here. So the S&P's got a little bit of bounce right now, and we talked previously last week, in fact, and the week before, about just opting out on these breakouts above the 2063, 2068 area. It wasn't worth it. You didn't have the leverage, in my opinion. The probabilities weren't there. The 240s kind of rolled over, kind of told you that it was just kind of not looking like the normal buy the dip, blah, blah, all that normal 6-year S&P talk. So what happened here? We talked about the 2068, 69, 2063 area, top of the box on the daily, top of the box on the weekly. That little DMZ was going to be the targets on the short side. If we had started breaking stride here, and we talked about this, 2090, 2091, 2092, being able to kind of catch that move down, that was a little bit of a fake out before on the 14th. And I got caught up in that a little bit, had to get stopped out. But again, the theme always is turn the rents the same way every day you go to work. And those targets you can't ignore, 63 to 68. And we reached a low of 64.50. So we got into the ripe little area, didn't have to bounce. We want to kind of focus on daily closes a lot of times. And we closed on Friday, 20.75.50. So, that was kind of, don't want to really go into the weekend that heavy on the short side, if not long. So this is the situation we're at right now. We have done the buy the dip thing. I'm not exactly thrilled for any longs right now. We're going to see how the market opens. And remember, these speed dials up here are, the premise is based on the internals of the S&P 500 for this particular index. Now, if we look at the NASDAQ, very similar situation. I'm going to go back to the S&Ps. So as the market opens, those internals are going to open, and some of them are going to open up, some of them are going to open down in the middle ground, whatever. So we've got a decent little yellow strip here. I want to explain what that is. That means that new box attempting to appear above on the dailies is almost 9% of the S&P. So you got some new supply happening up top. This is what our situation is, blown up. And I'm just going to take out the middle ground here just to show you we had crossed over the 240s a little earlier. But as the market opens, we're going to have some stocks that are opening up, and these numbers will change a little bit. So I don't think we're in full-blown like buy territory by any means, and we've talked about kind of opting out on that. But as you look at some of these global indices, I mean, this is almost like a sympathy kind of, in my opinion, and I'm not convinced that this is something to buy, and I'm pretty objective about this. Hey, the breadth is positive, and we got to buy the breakouts, and we got to buy the dip. That's not the case right now. So let's take a look at the treasuries before we go to our first break. Here we go. All right, so talked about not shorting the bonds or notes anytime soon. We're just going to cover some of this before we go to break. Cloud of close above, that was a little disheartening to see this fall back down below. But as you can see, market's rallying quite a bit. Bonds and notes are just kind of compressing here. So again, I think some of the signs are to point towards global rise. S&Ps can't really get out of their own way. Bonds and notes sitting on the launching pad to some degree, in my opinion, and I think this is just not the setup you want to see to pile into U.S. equities right now. And in fact, a lot of the growth, from what I'm hearing from some of the institutional guys that we talk to, they're just, the U.S. is not going to be the bang for the buck that it has been. So as we go into the break, I'm going to pull up to Shanghai, and we're going to talk about that a little bit as we come back. We'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. That just fell down here. And we're looking at the Shanghai. We talked about this before the break a little bit. I want you to look at the daily, the situation at hand here. Outside day, kind of key reversal situation. But the really weird thing is, today during the day, I woke up this morning and I was watching the, Bloomberg TV and a couple other things going on. And it was weird. The Shanghai was up and it was creeping up again. And all of a sudden, towards the end of the day, it just got smashed. Pretty good. But, in the grand scheme of things, what does this mean? This is our 240. We got support at 4168. And on the daily, nothing, no new supply attempting to appear. So there's, again, I think this is the buy the dip situation, believe it or not, even if we have an outside day. Remember, Shanghai can get super volatile. Make sure your stops are in. And, again, the big time stop's got to be below 4,000 if you're going to play this game with the Shanghai. The short term is 4168. That's the situation on the Shanghai. All righty, let's take a look at the DEX here. The daily, again, we talked about, got the massive just throw up moves starting to get below these unfair highs and unfair lows, recent unfair lows, about 12,000, and we just, obviously got nailed as we started showing the weakness on the 240s. So what do you do with it now? Got a really wide box on the 240s. I don't see a lot of leverage here. I see, to be honest with you, and I'm usually relatively honest with you, I think we have a shorting opportunity at around 12,000 on the DAX. So I'm hoping we edge up a little bit higher, and this looks like a relatively ripe situation on the DAX. And let's just get right into the euro, which is DAX somewhat related. We got back in the fair auction on the euro. I'm not a big fan of buying the euro. I don't like where we got in the fair auction. Now we're coming back down to it. That could be considered a buy point, and we've got a little a little bit of a divergence going on with our navigator down below, but again, I'd like to just be a seller below 107 again. That's kind of the way I'm looking at the euro. So not a lot of hope still for that currency, and just not a big fan of it. Had the big news out of China. Basically, the liquidity number that they figured mathematically will be new to the market now in China is about 240 billion. So, that's the Chinese using the devaluation game. I mean, to put it in a summation type sentence. So we're going to take a look also now, just going down some of the usual suspects before we get into the stocks. The gold situation, again, not a lot of things to lean on here in the middle of a fair auction. No breakouts above 12.15. I thought we were going to reach 12.15. This has been somewhat dollar related, as the dollar. Actually, you know what? Let me pull up the dollar really quick. Sorry about that, guys. Dollar a little non-directional, like we spoke about before, climbing a little bit. That's obviously not that good for gold, just from a default type situation. But gold's hanging in there. We bought that 1182 number the other day. I'm still standing behind. I think we can get up to explore the entire fair auction at 12.15. So long-term players, I think, can still keep stops below 1182 and kind of let this thing turn around and hurt some day traders on the wrong side. No big deal. Here's the 240s too. You got 1190 down here. But again, as you can see, the short-term bounce back off that 1208. But who wants to hear about the history of the thing? What is it going to do now? I think, still think the possible risk is to be short gold. So I'm just kind of keeping my long-term stops below 1182, hoping for the 1215 and then 1230. And right now, the risk reward on that's not great because we've come back in at 1197. But your risk tolerance, you should always have your trading plan, have the trailing stops in place if that's kind of the game you want to play, or at least look at the short-term levels. Now, the problem with the short-term levels on gold are relatively wide, so that's telling you be prepared for volatility in gold, at least in the interim. Okay, we got to hit silver. Silver's still not above that 1660 area. Here we go. Crossing the border up there. Not happening. Talked about it being the weaker of the two, gold and silver. Not very ripe. Not at this stage. We're gonna go back into beans really quick. This is kind of one of my favorite trades right now. I'm still a big fan of being short this. You got a relatively wide bounce there in the daily. We'll come back and take one more look at that on November beans before we move to some stocks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're finishing up the last thing we were talking about with November beans here. I think we're probably going to do a flush here below 942 and a half. So I'm just kind of waiting patiently for that to happen. If it doesn't happen, it doesn't happen. Got another resistance area around 973. So that's kind of what the story is on beans right now. Here, we're going to revisit a couple of stocks we've been looking at from the short side. Walmart, it's one of them. Want to just kind of alert you to. Let me turn this. Trying to get my green guy on here. Sorry, guys, trying to coordinate this with TFNN so we can talk about beans and corn and wheat. So Walmart, we just talked about staying away from the long side and using this as we looked at the scanner to try to pick out stocks that were weak in a strong, well, not in a strong market, but a market that kept drifting up, showing their hand early. This has just been like shooting fish in a barrel on Walmart and a couple other things we've been looking at from the short side, proving to some degree the relative strength game is not a bad game to play, just to kind of let the scanner pick them out for you. And I mean, you know, just in the simplest sort, below the box, you know, we can look at weekly bottoms, but, you know, very interrelated time frame setups. We're just going to kind of go down here and look at some of the, let me just show only matching results here. So as we look at this, you know, we still got quite a few candidates, got a little bit of a bounce this morning, but as you can see, Walmart's on there. You've got, let's see, UPS still on there, still showing some problems. Let's take a look at UPS. And what do you do with Walmart now? If you're in on the short side, this is the situation on the weekly. I don't see any signs, no new supply areas happening, no new supplies areas happening on the 240s. Believe it or not, this thing's, deep in the hole, but you don't have anything to really stop you out here except for trailing stops. So pre-market, we're looking at like 78.30s and some change. Stock is sick. Let's take a look at UPS. Similar situation. I mean, look at this. This is, I hate to use the term really cool, but it's really cool. You know what's cool? Taking something that's good for you. I love that Nico page. Anyway, 95.38 close on Friday. Talked about this being a weak piece of, and it really has showed its hand properly here. So, market's going to probably gap up a little bit this morning. I'm looking at that as an opportunity to sell. And you've got inflection points just to let you know on the, let's just go back into the S&Ps really quick. Got something to lean on here. We didn't talk about a lot when we were talking about the S&Ps, but 2090, we've reached a high already of 2089.75. I'm going to call that satisfied. So as you can see in this box, this 240 short-term box is appearing, about 8 hours ago. So we knew that ahead of time. We knew where to be patient, let the market come to you. So, that's kind of the way I'm looking at the S&Ps. We may be able to drift down and retest 2068, but make sure you put your stops in on the kind of the sell the rally thing above 2090, 2091. Okay. And that's kind of a barometer, again, for trying to pick out some of these stocks that are in the scanner. I hate to be so boring, but WFM, we took a look at Whole Foods, Whirlpool, Walmart, Weyerhaeuser. So let's just kind of revisit those. So just not to beat a dead horse, but, just proof of concept. Whirlpool, this is one on the radar screen. We talked about it, just going back and break down, go back and retest. That's just all you can hope for. And we talked about not trying to buy this down here, selling below 191.67. So that, again, has happened. 189.50 trading pre-market right now. Let's take a look at Weyerhaeuser. And, again, similar situation right across the board. Weak stocks fall, very safe, boring situation. You kind of want to get into as a trader. And we're going to take a look at one more here. Trying to get my guy on here from the elevator. All right. So we're going to go back to the scanner really quick. A couple other Whole Foods, WFM. Let's just take a look at that really quick. This was one that we were pounding the table to some degree here. And why? Because we had showed our hand 50.76 breakdown. Again, this is really the action I love to see. We're kind of getting down to these lows. Market's drifting higher on a weekly basis. And then all of a sudden, kaboom. Gave it up. Breakout on the downside. And cleared the 51.49 first. So then the weeklies, and then it was just everybody has to cover in situations like that. All right. We're going to go back into the scanner one more time. Did I say one more time last time? We took, Sherwin-Williams. We had been looking at that. SHW, Raytheon. Again, a lot of stocks fell, period. In fact, the daily, as you can see, breadth had changed and negative. That didn't happen on Thursday. I think the middle of the day, Thursday. So as we look across these, Nike, a couple other ones that have just been showing up, I want to take a look at McDonald's. This is one, again, we were looking at this, 97.39, the leverage point. We've been talking about this. Got a little bit of a scary situation there, but kind of calmed down and got back down below as the market was still drifting higher. And then all of a sudden, we got 3 or 4 points in it. So that's kind of the beauty of relative strength trading, is letting the scanner pick out the dogs or the stocks that are showing their hand. What I want to do right now is just go back into the XLF. One of the things Eddie and I were really not pounding the table, but saying, it's a good situation, I think, to have on your radar screen. And we talked about kind of Custer's last stance on the long term being around 24.50, and we got a nice little pullback on that. And here's the situation on the XLF, 24.13 as of the close. Got off those week. We talked about that DMZ between the daily unfair lows and weekly unfair highs that seemingly has held. And I think this thing could go much lower. And I actually hope we retest 24.28 on the opening, and then we can just get some leverage up there. You got the air conditioner on? Can you make it colder? I don't know which way to point the finger. Let's take a look at the XLV. This is something we kind of talked about. We've got a buy point around 72.70. We've come back into that. I'm looking at this. This is obviously kind of an outperformer healthcare situation. So the long the healthcare, short the XLF. And if you take a look at the XLE, we've been talking about trying to stay long this. Not a ton of reasons to get out of this, even with the dailies, the market gold pulling back a little bit. XLE is always kind of that relative strength versus gold. I think it's a little bit easier to trade. Here's the 240s on the XLE. We came back and kissed that 81.17. You've got a lot of support around 80. So remember that below 80 on the long term is where you might have to consider dropping this, at least temporarily, because that will be a change in tone on the technicals. And there's that 80 sitting there. But, I fully believe this thing could gather itself and actually move higher. Not the greatest news in the world out there for oil longs, and I love it. All right, let's go back into oil. Here we go. As we talk about it, and here's the 240s kind of hanging in there, but if it gives it up below 55, you got to rethink this thing until 53.67. That's the next kind of buy point, in my opinion. Now, on the short term, we didn't talk about this a lot. I'm not a big fan of going short gold, but there are some shorting opportunities between 55 and 53.67. Going to have to keep your eyes on the XLE if that thing holds in there. If oil does drop down to 53.67, I think you just got to pick it up. Not put it in your long-term investment portfolio, by the way. I'm not a big fan of doing stuff like that. All right, so we're going to go back and look at a couple other currencies really quick. Australian dollar has really started, let me get my charts straightened out here, really broke stride a little bit. And we were kind of looking at the weeklies, and that 77 area, that neighborhood we talked about, that was something we were trying to base some shorts around. Got back in there. That's where we got to kind of say uncle here. But if you step back and look at it, you got the opportunities on the weekly still, and I'm a big fan of shorting this long term, 78.94. That's the leverage points on the Aussie dollar. We've reached a high of 78.41. So we haven't quite gotten there. We started pulling back off of it again. And that's kind of where we're at. So, the leverage point on the daily is 77.19, 77 general area. So 77 general area and the 78. I got a couple emails about this. 78. 93, 94, let's just call it 79. That's kind of going to be your range right now on the Aussie dollar. Japanese yen. We're going to hit this one really quick. I'm not a big fan of going short the yen. I love how this is hanging in here. Got a little bit of a noise factor below that one. Point this out to you. Let's just call it 119 neighborhood. I like how this is hanging in there. I'd like to see it move higher. That's the situation on the end. Stops down below based on your appetite for risk below 119 or 118.90. Okay, so we're going to pull up the scanner again, and we're going to take a look at the DAX breadth. Actually, we're gonna not pull up the DAX breadth really quick. I'm sorry, I wanted to pull up the DAX underlyings. Okay, so, I was like, that's not the DAX. Here we go. Here's the DAX. Let me just clear all these sorts. Okay, here we go. It's like, man, what is that? All right, so here's the DAX, and as you can see, we kind of, even though we've rallied quite a bit, you still got a lot of stocks. I mean, primarily more stocks, especially on the interim, below profile. So that's the same situation for the daily index value, right? So as we look at this, I'm still looking at the DAX, hoping we can get back up to 12,000, that area, and then put stops above. That's going to be, in my opinion, the inflection point to pay attention to. And if that's the case, and you look at the scanner, you look at some of the components inside the scanner, a lot of guys out there trade the DAX. You should kind of keep your eye on this. Balanced gray into below the box on the DAX as the index reaches, if it does reach that inflection point, I'm going to feel a lot more rosier about shorting that product. Okay. We were looking at that earlier, Eddie and I. Okay. Excuse me. We want to take a look at Apple and see how the probably most widely held stock in the U.S. seemingly. I'm reading the Den, Corzine. Are there any fans of that guy out there? I'm going to shut up. Anyway, this is the situation on Apple. Got a couple emails about it. This is a very thick situation. You've got the 122.5 general area you got to pay attention to. Now, as you look at this box, it's squeezed in a little bit. Inside box, if you will, in the dailies. We're kind of compressing. You're going to have to look for breakouts outside. It's probably not the most attractive thing to trade the range right now. So if you're long, again, stops below 122.5, in my opinion, based on your appetite for risk, or breaking out above the 128.58 and absolutely clearing 130.76. You got to pay attention to that one too. We'll take a look at Netflix. This is something Joey and I had pulled up the other day, and he was, talking buy the dip. And my God, look at what's happened here. I got to get Joey back on. I think everything he talked about was just spot on. The Asian indices, the Netflixes of the world, the 3Ds. Here's another one. He said, the timing was wrong for this, and we're going to have some technical damage. And we had the technical damage. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hey guys, got about 4 minutes left here. Here's the follow-up on 3D Systems Corp. This is one of the 3D printing situations Joey was talking about. He was talking about when we were kind of hovering right here on the daily 2778, gathering some steam here. And we talked about targets based on profiles around that weekly unfair high. There we go. We met those, and the long-termers are going to have to see this break above 32.5 for sure and a close above. So that's the situation on Triple D. Let's take a look at CSX. This is another stock that we were looking at. And again, we give both sides of the coin here. Had a little bit of a 33.41 was that weekly breakdown, and we rallied back up into it now. This is one that didn't do the follow through. Weak stock in a strong or a market moving, drifting up. And that's what stops are for. If you want to, the dailies, you had some 32.97 DMZ into the 33.41. We're trading 33.50 and some change. And again, the premise of what I'm trying to say here is basically, you're risking a couple of points to try to make quite a few. And if we get stopped out, you can't go to the gambling center and really expect to win by risking a lot. I mean, it's I hate to call it a betting scheme, but it's, you're trying to have your risk reward ratios in line, and the stocks or the instruments, I know I'm preaching to the choir, but you want to try to limit those losses and try to let your profits ride. And I know that's been said about a zillion times, but try to keep that in mind. It's a simple concept, but it's something so true. All right. we're going to take a look at another stock that we were paying attention to the other day. Actually, we weren't paying attention to this one, but I want to pull it up. All right, so Amazon. We get quite a few emails about this. I mean, we kind of had that good announcement. We've kind of been a little bit of a short situation that's been nice. But then when we had to break above profiles, we looked extremely longish, and that 3080 was pierced. Now that's your support area on this type of mechanism, on this gathering type situation. And when it's pierced and broken, stops are in order. Your next stop down 370 on Amazon. Again, this is something that high flying stock, relatively speaking, and market just dragged it down. But these are what stops are for. Again, we don't talk about that enough. And long-term traders, below 370, that's going to be a major uncle point for guys in Amazon, and it may be a great selling point. I'd love to see some market cooperation here. Let's see, pre-market, where are we at on Amazon? This is true. 378, so about 3 points higher, still in the balanced area, and you got to look to the S&Ps for a little bit of a guidance tool on this one. Okay, I want to pull up something else, Newmont Mining. Now, the reason I'm pulling this up is because last week we just kind of opened up, retested, got back in the fair auction. This was, something that I was looking at that was looking relatively short, but again, that's what these stops are for. And that's kind of one of the premises of the show today is, not showing you all the rosy things all the time. This was one that I had on the radar screen that again, risk reward, risk reward, risk reward. Scanner gives you these ideas. It's up to you to get the money management right on them. So now that we've broken back up in Newmont Mining, now you've got a possibility of exploring the fair auction in the weekly, and you got to look at stops below 23.29. Guys, you've been great. Steve Rhodes is next. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.